everything's a little quiet. It's a little too quiet, maybe.
A little too quiet. It's like, it's like one of those John Ford westerns where, everybody's kind of scanning the prairie and saying, it's a little quiet out there, a little too quiet.
And Jonathan Chang's going to tell us, what are they looking for?
Well, I think a lot of people, Brendan talked about this a little bit, but a lot of people have been looking for a pullback this year. It hasn't happened. So what you have is a lot of people still sitting on the sidelines in cash. These are ordinary investors who still remember 2008 very well. These are hedge funds who came into the year perhaps a little cautious. We have investment bankers who aren't doing a whole lot because they're waiting for signs of stability. They got them, but nobody ever thinks the coast is clear, and that's still perhaps the case now.
But we also have these shocks, Greek debt, these headlines we keep hearing that keep scaring people a little bit. I mean, what is it going to take to reassure people?
Beyond what we've seen already, I don't know what it's going to take. It's been 45 days, as we note today, without a single triple-digit decline. This is exactly the conditions that they were looking for last year, whether you were a retail investor, whether you were in charge of deal flow or IPOs. People just said, look, we couldn't do anything last year because the markets were too volatile. Well, here's your gift. You've got 45 days here, but not a lot has happened in that time.
And there's a gulf between the way people say they feel and the way they're actually acting. I mean, we've seen individual investor sentiment readings coming in well above historic averages in terms of bullishness, and yet you've still got, people with 25% of their portfolio in bond funds that aren't returning anything to you. I want to go out on Main Street and start slapping people.
Create some noise. We don't want to hear it to be this quiet. Should we be hearing more celebration
We
from
should
Wall
be,
Street?
but again, you have to keep in mind that the last decade we've seen two big stock busts. We saw it with the tech bubble at the turn of the century, and of course we saw the housing bubble kill stocks again. And when you have your ordinary mom and pop investors out there thinking back to how their portfolio was just going up, down, people aren't going to believe this too quickly. They'd rather take a cautious stance. But at some point, the market's going to start rolling ahead, and they're going to have to say.
And there's a degree of suspicion about Wall Street these days. I mean, nobody, we still haven't locked up a single one of the, bad actors from the financial crisis. And I think most people are a little suspicious. It seems like high-frequency trading and the advent of ETFs have really pushed the individual investor basically to the sideline.
And volume is down off of last year. I mean, is that what
dramatically?
If we had a big arrest, if we had the perp walk, would that, from the financial crisis, would that reassure the average investor?
Well, my personal take is just that Wall Street, you can say what you want about their complicity in all of this, but you have to keep in mind that many people in Wall Street also have no idea where this market is going either. I mean, you can see people, even the smartest guys in the room got embarrassed last year. This year, we came into the year with Wall Street strategists all saying, be cautious. And in the past few days, we've seen a lot of them say, actually, never mind, we were totally wrong. So they're always waving the white flag left and right. And at a certain level, it's hard to say Wall Street is masterminding this, that they're, the puppeteers here, because a lot of them are looking pretty foolish right now, too. So,
they're in the same boat.
We're
as
all
the
in the same boat
here.
Yeah, that's right.
Well, there's also the factor. One thing that I've looked at is the way that the IRS has been returning, the Treasury Department has been returning tax refunds. We're well below the levels we were at in 2010, even though there's a bigger bulge in employment. That tends to be a capital that finds its way into the market this time of year. So seasonally, I mean, I'm going to blame the government.
Well, I don't think you're going to find
No, this would be more popular on Fox, I realize.
No, but you're right. I mean, and that's it. It's people are still feeling like times are tough right now, even though the unemployment rate has come down. People's sentiment readings, the way people feel. I mean, they may say they're feeling better, but ultimately where they put their money and how much money is coming back into their bank account is probably not as much as we need to get this.
Yeah, even as the
going.
unemployment rate comes down, you still get the feeling that, number one, wage growth has been rather anemic, and number two, everybody feels like, okay, if I have a job, I'm holding that job. I'm not moving on to a better paying job or a more challenging position. So I think the level of anxiety among the average consumer remains relatively high, and consumers are, 3/4 of the U.S. economy.